Today, we saw stocks crashing lower where Intel was down 26% on the session. We look at the fear and greed index. At one point, we are over in an extreme fear territory. And the question is, has the stock market reached max fear? Today, we got the jobs numbers and they came in very disappointing. Only 114,000 new jobs were added and the unemployment rate actually ticked up to 4.3 from 4.1. So is this the beginning of a bear market? Are we only going to see selling from here? And was this stat right here right about the NASDAQ peaking out in the month of July? Today, for a good note though, look at NVIDIA. As bad as the market was today, NVIDIA was only down 1.77%. Also, Apple today was actually up in a down market. Now, Apple did not close at the highs of the session, but it's still something we most certainly want to pay attention to. When we come over and look at how the indices fared across the board, the Dow was down 611 points. The NASDAQ was down 417 points. The S&P was down 100 points and the Russell 2000 was down 7.59 points. And if you look at advancing issues versus declining, we had 79.3% of issues declining on the day, leaving only 18.3% of issues advancing for the session. Then we come over and look at the sectors. The only sector in the green was consumer defensives. Every other sector was in the red. And if you look, consumer cyclicals were down substantially for the session. Now, if we look at this chart right here, chart of SMH, yikes, this is one ugly chart. Today it was down 5.39%. But we got to ask the question, has the market gone too far too fast? And you might say, well, Mike, I thought you said when the dollar goes down, the market is actually bullish. We should be looking for buying opportunities. That is true on most occasions. However, the bonds were also on the way down lower, which I also normally say that favors the bulls in the market. But why do you guys think the bonds were lower today? Because the big investors were fleeing into safety and saying, you know what? Let me out of these stocks. Let me jump into an asset to where I know I will get my money back. Not that I'm going to make money, just I know that I will not be losing any money. Then today we look at the volatility index. This is one of the highest spikes we've seen in quite some time. It made it all the way up to 29.66. And this is what I kept warning you guys about when we were down near the 52-week lows. I said, watch out. One, it's twofold, right? Most dips tend to be bought, but we could also see a volatility spike, and that's exactly what has been being played out. Now, we almost made it to 30, then the VIX came down substantially. So we got to ask ourselves, has the market reached max fear for this little leg down that we have in the market, or are things going to get even worse? We look at the Russell 2000 today. Yikes, a big gap down. And then we have a doji candle where the Russell 2000 was down 3.5%. And look where we're at. Right near the 61.8. We actually made it right between the 78.6 and the 61.8 Fibonacci levels. The MACD indicator is starting to cross from an elevated level. Then when we look at the diamonds, we had divergence up here. We came right into our resistance zone. We got confirmation yesterday, but look at the candle today. We actually were able to come up substantially off the lows. The Dow futures at one point were down almost 1,000 points on the session. And then when we look at the QQQs, also gapping lower today. So now when we look at a chart of the Qs, we've hit the 127 extension. We have a gap from today. We have a gap right over here that wasn't filled, and we have a gap right off the high. So we have 3 open gaps to the downside. And if we look left, a lot of these gaps that we had open over here to the left have now come back and been filled. The MACD on the daily chart still looks extremely horrible at this moment. And on the 4-hour chart, you can see we do have some divergence setting up within the MACD indicator. On the 1-hour chart, we talked about this morning how the MACD was starting to roll over. And again, it did definitely push to the downside. But notice we went down today, then we started to consolidate. And we got to ask ourselves, has the market reached max fear where enough selling is enough for the time being? Now we're going to start working our way up towards filling some of these gaps. Today, look at the volume profile levels. Notice we never got back above the low over here. So there was no need to try to be on the buy side of the trade. But something that could be setting up for next week is look at the MACD indicator, having a fresh cross to the upside. Then when we come over and we look at the futures markets real quick, notice we came right to the high volume area. And I've been talking about this for some time. And some of you guys were beating me up in the comments saying, Mike, we are never going to make it down there. The markets only go up. Buy the dip, buy the dip, buy the dip. Well, where was buy the dip crowd out there today? A little bit of pie on your face. However, I do think at some point we are going to start to get a pullback in this market. Now, is it going to be next week? We look at the range this week. We had a 1,331 point range. Last week, we had a 1,201 point range. The week before, we had an 1,143 point range. So are the ranges just going to continue to expand on the way down, or is enough enough? In a matter of 3 weeks, we have wiped out 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of trading in 3 simple weeks. And that's why they always say the bull market takes the stairs on the way up. The bear market, we take the elevator on the way down. And if we actually measure right up here from the high down to the low, notice that NASDAQ has dropped 2,600 points. We look at this from a percentage standpoint, notice that is 12.44%. How much lower are we going to go? Are they going to now consider this a true correction in the market? And the timing of this is rather suspicious right before the elections. Are some of the politicians going to be in trouble with the stock market selling off the way it is? Because we know if the economy goes into a recession and the stock market is crashing, regardless of your political affiliation, any politician is going to have a hard time getting reelected when everything looks so bad. When we come over and look at the S&P 500, this was quite a straight move on the way down. 1, 2, 3, 4, 5, 6, 7 consecutive 4-hour candles on the way down. The S&P this week had a range of 269 points. Now, a little preview into this weekend's video is this is going to be an area I will want to focus on for a bounce. At some point, we will get a bounce in this market. And we zoom this chart out here a little bit. Notice we have another untested point of control slightly below us. We actually have 2 of them. Are we going to come back and retest those levels at some point in the future? I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You can get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Because when we come over and we take a look at the SPY gapped down today, but we have that hammer-ish candle. Now the SPY does not have 3 open gaps. We have one up here. The one right over here did get filled the other day. And now we have one that was left behind today. But notice the first time we came into the minus development area, we bounced and rejected out. The next time we come into it, we came all the way down towards where? Right near the next high volume area on the composite profile. The MACD indicator on the daily chart is showing no signs of firming up at this moment. And if we actually dive over real quick and we look at the weekly chart, what do we see? Weekly chart, we're just now starting to cross to the downside. So we want to be very cautious. If you're a buy the dip type of trader, be cautious. Yes, dick out bounces could be fast and furious, but with the MACD elevated up here and just now starting to cross over, that could actually signify we could get a more meaningful correction on the way down. Look at the last time that the MACD indicator rotated down and we did not even make it to the 0 line. If we measure, that was right over here, down to here, that was about a 10% correction. If you look at how far we've come down now, we've only come down about 6.5%. Keep in mind, a 10% correction would bring us all the way down here to about 508. Now, if you guys want to be prepared for when the market bottoms, and you want to learn how to trade double bottom patterns while using order flow, watch this video right here.